Thanks for tuning in, team. In this video, I'm going to talk about what an exchange traded fund stock is, otherwise referred to as an ETF, as well as what a growth stock is. I'll talk about the benefits of those two types of stocks, as well as talk about my progress from an ETF investor right through to a growth investor. Before I do that though, let's roll that in. Welcome back, team. If you're new, my name is George and welcome to Island Money. I just want to say a big shout out to everyone that showed support to me over the last couple of weeks. It's amazing to see how many people are actually interested in investing and want to learn more about the stock market. I had a good feeling and I knew this was a good thing, sharing my journey with all my brothers and sisters out there, near and far, all around the world. Yeah, I've just had overwhelming amount of support and thank you for all your messages. It's great to see that you guys are definitely keen and interested in following my journey. With that being said, guys, I'm not a financial advisor. Unfortunately, you gotta use this. Do your own research. If you don't know how to use your brain, then please seek help from a financial advisor, a professional, not some guy on YouTube that's just sharing his journey. Let's go. All right, so let's check out what an ETF is. An exchange traded fund ETF is a type of security that tracks an index, sector, commodity, or other assets, but which can be purchased or sold on a stock exchange the same as a regular stock. An ETF can be structured or track anything from a price of an individual commodity to a large and diverse collection of securities. Definitely a head-scratching moment right now for me. I don't know about you, let's do our best to break this down. Still scratching your head? All right. Let me simplify for you. So, have you ever heard that saying, don't put all your eggs into one basket? So, picture an ETF stock as a super large basket with all these little baskets in there, and then you're putting all your eggs spread equally among all the little baskets within this massive one, okay? So, an ETF stock is a stock that represents ownership in multiple companies, most likely ranging in different industries or sectors of the economy, okay? So to give an example, you might have an ETF stock that has travel companies in it, airlines, flight centers, Air New Zealand, Qantas, and then part of that ETF stock, you might also have technology companies in there, like Microsoft, Tesla, Apple, and then you might have, a power companies in there as well. Some of the biggest power companies might be part of that grouping. So that one stock doesn't actually just represent one individual company. That ETF stock represents the multiple companies that form that big exchange traded fund, the ETF. Okay, so the benefits of investing into an ETF is that you kind of safeguard yourself against volatility, and waking up one day looking at your stock, there's less risk that you're going to wake up and that you've lost all your money in that stock. Now, definitely possible, not saying it's not, but you put more safeguard against that risk owning into ETFs because of the diversification that you're giving yourself. So to give you an example, with COVID, right? If you owned into an ETF that had such companies as I just made up, during COVID, we all know that the travel industry, holiday industry got smashed, okay? Went down, crashed. A lot of hotels, I know in the Cook Islands, a lot of people got let go because there just weren't any tourists. So the travel industry really struggled, right? But the technology companies all boosted. So things like Apple, Microsoft, Tesla, all their stocks went so high. So if you owned in an ETF that had a balance of those two different types of companies, yes, you would take a little bit of a hit because the travel companies in that ETF struggled, but you would also rebalance that out because the technology companies in that ETF did so well. So you safeguard and you offer yourself a little bit of protection, having like a balanced portfolio into different sectors of the economy. So hopefully that makes a little bit of sense. Now, I guess one of the challenges with owning ETFs is that the growth in the stock value is not as fast, you could say. So you wouldn't expect to own an ETF share, say for example, for $1, and then in a year that dollar be $10. It's highly unlikely that's going to happen. You would, in history, and I'll share some graphs with you so you can see the facts, there has been a gradual rise in the value of stocks associated with really good ETFs. But again, nothing's really guaranteed. So just keep that in mind. There's the diversification, so that offers you a bit of protection. The growth in the stock value is quite slow. So, you know, it's nothing compared to like a growth stock like Facebook. When you bought Facebook at like $30 a pop, and nowadays, you know, Facebook is worth 300 and something. So you wouldn't expect massive growth like that in an ETF. But again, who knows? No one's got a crystal ball. Anything can happen. And the third thing to be mindful of owning an ETF stock is that usually there's a small fee that you pay to have fund managers manage that stockpile of companies for you. So there's usually a little fee that they obviously are transparent with and let you know about, or you can find out about, and I'll share one of the examples that I'm going to use. So those are the three things I think to just be aware of when you're investing into an ETF stock, but also kind of understanding what an ETF stock actually is.
This is just a quick example of an ETF stock called the Vanguard S&P 500, ticker code VOO. So just to give you a quick idea, so you can see here what's involved in this ETF stock. So you can see here that it tracks 500 of the largest US companies. By the way, team, if you can't see this clearly, feel free to just Google it yourself. You'll be able to check it out, do your own research. But it tracks 500 of the largest US companies. You can see here, there's that little fee expense that I was talking about. So the expense ratio is 0.03%. So you would pay a fee of 0.03% for the managers to manage the fund. So that's your contribution. You can see here that the price of one share price is $405 as of today. And then when you come down, you can see performance, so average annual returns of this stock. So you can see there, I'll try to zoom in. You can see there since its inception, back in 2010, you can see that it's returned an annual percent of 15.8%. That's quite high and quite steady, to be honest, considering that, you know, I haven't been around for a while, but the most I've seen a savings account pay interest was probably about 5%. And if you compare it to today's interest rates that a savings account will get you with a bank, it's not even 1%. The fact that this, since inception, is returning investors 15.8% each year, that is just, it's crazy. That's just amazing. So you can see here that in the last year return, it's returned 40%, which is huge on your money. So imagine you had 100,000, you would have earned 40%. So 40 grand is what you would have ended up with if you had that invested in this ETF over the last year. Just amazing. But that gives you an idea, so you can see the performance. And then this is just an idea of if you had 10,000 invested in it in 2011 and you absolutely did nothing. So say you just put 10,000 in, you let it sit there over the years, you can see that the marker there, it would have grown to 40,000 just doing nothing but sitting there. So this is one of the benefits of ETFs. They provide, some of them, the good ones, provide steady growth. Again, keep in mind, no guarantee. So you can see the breakdown of the ETF, so what sectors it's involved in. And then you get to see the 10 largest holdings. So you can see here that its number one largest holding is Apple, then Microsoft, Amazon, Alphabet, which is Google, Facebook, so and so. So that's just a quick example of a breakdown of an ETF that you can find online specifically for the Vanguard S&P 500 ETF, ticker code V00.
Quite simply, team, a growth stock is a stock that has the potential to multiply its value in the near future or even the distant future. But pretty much you believe that it's going to grow from here to here over a certain period. So if you take Facebook, for example, that's a growth stock. At one stage, the share price was worth around $30 USD. To today's price, it's worth about 300 USD for that same share. So you can see the growth story in that company. If you look at Tesla as well, another amazing company that's been hitting all its goals over its roadmap. You look at it when it first started, the share price was, at one stage was under 50 USD. And now, if you don't count the stock split, it's worth, that same share would be worth 3,000 USD. So you're looking for companies that you believe, after doing research or your homework or your investigation, that you believe there's a good growth story to that company, that you see that company is going to multiply in value over the years to come. So that's what growth stocks are all about, and that's the particular style that I like to target. Because I'm still young, well, I think I'm still young anyway, 35 years old, I still think that I've got many years on this earth, 30, 40, 50 years, hopefully. So I look for companies that I believe are undervalued right now, hopefully with a long distant view, hopefully that in 10, 20, 30 years, whatever I buy it at, that value will multiply by 10, 20 times in the future. So that gives you an idea of ETFs and growth stocks. That's it for tonight, team. I hope you enjoyed tonight's video, short and sharp. Just a bit of more clarification around what ETFs and growth stocks are. What type of investor are you? Drop a comment below. Love to hear your investing style. If you haven't got into investing yet, that's okay. Take your time. Remember, do your research. Speak to a financial advisor before you even step foot into the investing space. For all those that reached out to me, private messaged me, showed some support and love, thank you so much. I'll continue to drop videos for you guys. But in the meantime, stay safe. Look after each other, be kind, and I'll be back next time. G.